Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market and figure out what is happening and what we can expect moving forward. So as usual, if you enjoyed, don't forget to hit that like button. It does help a lot. This is not financial advice and I am not a financial advisor. And of course, my membership section on YouTube is live. My chair is like being weird. The link is down below if you're interested, $3 a month, where I share my intraday thoughts on Tesla as it's moving throughout the day itself. But with that being said, let's jump into it. Tesla closing the day actually down about 0.5%. Which will be putting us at about almost $219 per share, which unfortunately compared to the market is a little bit of an underperformance. Now, what does this all mean, Ryan? Well, what can we expect moving from or going from like, I guess this close essentially moving in for the rest of the week, let's say, or maybe even the rest of the month. So honestly, it's a little complicated, but it's not too bad. So hopefully I said it in Friday's video, but I said it to my members how I expect personally. I mean, I'll scroll down to it very quickly here. I think it was this one here. Slightly bearish close on the daily today. We are stuck between the blah, blah, blah. Might get us another small pop on Monday, but I expect an overall sell-off to 212 next week, right? And that's kind of what we got. We got that initial pump at the beginning of the day, pretty much as the market opened, which I'm very sad about because I slept in today, and that's exactly where we're in a beautiful time to enter some puts, but it's all good, right? The point is we got the pump, we got that sell-off, we broke below a pretty crucial level of about 218. But thankfully for the bulls and slightly unfortunately for the bears, they couldn't manage to close it below the 200-day moving average on the daily, right? I mean, I guess it is technically below, but it's pretty much right at it. So you want to take it with a grain of salt in my opinion, but essentially it's closing right at it. So there's a few things to discuss here. The fact that we're closing pretty much arguably right at it, if not above the 200-day moving average, means that, this might take a little bit longer than expected. Ultimately, I still think, again, kind of medium-termish, I think Tesla personally looks great. It's more about the short term that's potentially a little bit iffy here, right? Because again, we had a beautiful rally, massive rally. This is like a 17-18% rally from the lowest point to the highest point. And it's fantastic, right? And it's not abnormal to cool off from such a rally, right? So, because we're kind of still stuck in between these two situations, the 21 EMA, the yellow line, and the 200-day moving average, the green line, it's a little bit complicated, but looking at the 65-minute chart, it might give us a better idea as to what to expect, right? Because on the daily, like I said, medium term, we're looking good. The RSI is looking good. The MACD just flipped bullish, actually. So we're looking pretty okay, honestly. Pretty good for the bulls on the daily. It's not looking too bad just yet. So, it's a promising sign, at least for now. But again, the short term, which is where the 65-minute chart comes in, is where things are a little bit more shaky. So we had that sell-off, we broke below, coming back up to retest the 220s-ish, kind of old support, now resistance-ish area, give or take. And I personally think that will fall back down, right? Again, ever since we broke above this little blue line right here, right, we had a nice little rally. And then the way I see it is this, right? So we have a potential little bit of a double top in the 15-minute. You can see here, right, we had a massive rally, came up to about 225-ish roughly, got a rejection, came back up pretty much exact to that pretty much exact same level, and got rejected once again, setting up what looks to be a short-term double top, right? And then, of course, we broke down, and now we're coming back up to retest that pretty much right around this level. You can see we constantly bounced right around here. Like if I kind of go like this, you can kind of see, right? We constantly came back down to these levels right around this kind of like 219-ish area, maybe a little bit lower, 219, 218, that kind of general level, right? Constant, support, right? Constant wicks getting bought. And same kind of, the flip rather over here where we had a nice little rejection, came down, right? And now we're pretty much coming back right up to that level, getting a bit of a resistance. You can see a decent wick up here. Some selling pressure now is coming in. So essentially an old support turned into resistance, right? Pretty common stuff. Now, there's a few caveats here. So if this goes kind of as planned, and then let's say there's lightning outside. I don't know if you guys saw that flash, but pretty gloomy outside. If this kind of goes like, let's say, as planned or like, as per usual, the normal route that I hopefully expect. Mamacita. I don't know if you guys hear that. It's pretty loud. But what I expect from here is essentially a rejection, pretty much right around this general level we're at right now, this kind of 219-ish level, right? And I personally think we'll go lower, right? I do think we'll go lower. I think what we do essentially set up is that double top. We play it out more confidently. And that's where I think we ultimately come down somewhere to around this level over here. So essentially, the starting kind of price target for my downwards area is going to be 212. I think we'll go lower, honestly, but 212 is like my first price target. There's a chance we just bounce right off of that and we're good to go. But I personally also think that there's a chance we come as low as about 206, which is this gap fill, which is perfectly fine because essentially what we do is we're setting up a potential inverted or bullish head and shoulders pattern. So we have the left shoulder right around this general level over here, somewhere around here, right, give or take, right, with this long wick, which acts as a part of the shoulder. We have the head over here. Then, of course, we have the potential right shoulder that might start developing right around here, right? And what that means is pretty simple, right? If we come down to, again, 212, 210, 208, maybe even 206, any of those levels is perfectly fine to me, perfectly valid, and we can bounce off of that and set up the right shoulder and look pretty damn good going forward, right? We bounce off the rough area from where the head got, a little bit of resistance you can see over here, right? And then essentially we pretty much make the same place that the left shoulder did. That's kind of the idea behind it, right? I think that's going to happen. The second thing that you also want to look at on the 65-minute chart is the RSI, because essentially we're setting up a bearish divergence where, pretty much we're pretty much going towards the same levels where the candles are closing. Keep in mind, it's very important. You're looking at this where the candle's closing, not where it went to, because that's where the RSI level is at essentially. It's out not where the candle went, but where the candle went, but more importantly, closed, right? So the point I'm trying to make here is the fact that as we're essentially pretty much closing candles all around the exact same level here, because here we were closing candles all around 221, 220s, right? And now we're closing candles at 219, which is almost exactly at the same level, but we're making a very obvious lower lows, lower highs situation here. That's a bearish divergence. Now there's two forms of bearish divergences. The one we're seeing right now is a mediocre bearish divergence. What do I mean by that? That essentially means that if you're pretty much going sideways, or let's say in this case we drop, or we came back up, and we're ultimately closing candles pretty much at the exact same level, right? Again, this 219 to 221-ish level. We're just constantly closing candles there, and the RSI is, making those lower highs and whatnot, like the way it's happening right now. That's a medium, a moderate bearish divergence. A stronger bearish divergence is when you're making on the stock itself higher highs, but the bearish divergence, or the RSI in this case, is making lower highs. That's where it's a much stronger bearish divergence. So with that being said, I'm still open to the possibility of this potentially being one more bull trap. We potentially go a little bit higher, maybe set up some candles a little bit higher as well, start closing candles potentially even higher than these levels, let's say somewhere around 223, 224, right? Pretty much right at the 21 EMA, which is around 224, right? Let's say we start closing 65-minute candles there. The RSI doesn't make a higher high, then it's a much more powerful bearish divergence, and then it becomes even more probable of it, playing out essentially to the downside. So those are the main things I'm personally eyeballing right now, right? Again, we're sandwiched in between. We have a potential inverted bullish head and shoulders starting up, but of course that means we have to go a little bit lower to set it up. The bearish divergence, MACD flip bearish on the 65-minute chart. So, again, the short term to me looks a little bit shaky, and I do think we'll go lower. And again, as long as we go, we can go all the way to 206, and it's still, in my opinion, perfectly fine. But that's kind of the main way I'm looking at it right now, right? And that's the main thing I'm kind of being patient for. Right now I'm scalping. So for instance, I did buy shares when it dropped all the way to 216, and then I sold it at about 218. Quick little scalp, again, nothing major, just kind of having fun with it while I'm being patient about it to enter a more, dominant position, if that makes sense, with shares. But that's kind of the way I'm looking at it right now, right? That's the main thing I'm eyeballing. And yeah, but again, I want to make it very clear, even though I do expect very short-term downside, honestly, probably this week. I'll be surprised if it's not this week, but probably this week. To, again, those levels I talked about, anywhere between 212 to 206, I still think Tesla overall, medium term, is a lot more bullish than bearish. I really do believe that. So for instance, this is kind of roughly what I personally would expect Tesla to do. Again, move to the downside sometime this week, I think. Somewhere around here, give or take. We'll just put it 210 for now, but again, it could be 212, could be 210, could be 208, could be 206, anywhere in that range, in my opinion. I think we'll come down, maybe go sideways a little bit, but then ultimately, I think we'll go higher. And I actually don't think it's unreasonable to think that we can make a move that looks something like this. Maybe as we get FOMO into the Cybertruck near the second half of this month or something like that, right? This really wouldn't shock me whatsoever if we get a move that looks something like this roughly. And that's kind of what I'm expecting, and that's kind of what I'm looking for as of right now. So, if anything changes, obviously I'll update you guys. Obviously, this is just a prediction. Obviously, nothing's guaranteed in the market, right? That's, if you think that whatever I'm saying or anyone else is saying or whatever you're thinking is just a guarantee, there's nothing that can possibly go wrong. Well, that's how you get humbled. Just a prediction. I have obviously shares in the market, so if we just straight up rally from here, fine with me. I have shares. I also have cash, so if we do fall down, I will be buying that dip. And if we fall lower than I expected, so let's say we go below 206 and especially below 200, I will also have cash ready for that as a backup situation. If I'm very wrong about the switch, of course I might be, right? But that's kind of the main way I'm looking at it, and I'm positioning myself and being ready for all essentially three scenarios: whether we rally from here, whether we get the drop I expect, or we drop even lower than I expect. But that's kind of how I'm seeing it. So with that being said, let me know what you think down below. Ladies and gentlemen, let's take a quick look at options flow and see how that is shaping up right now. I did tell my members not too long ago, but we'll take one more look to see if it changed towards the end of the day. And you can see it's definitely looking more bullish than bearish. The only thing that's unfortunate is the fact that all these little small green circles, which are bullish, of course, are very light. They're not massive positions. They're not whales. They're not like some giga, massive, like, person with a lot of money coming in, giving some confident play here. They're all relatively small. Again, 400K is still a lot, but it's nothing like worth really truly noting. So market's looking bullish. I mean, options looking bullish, but it's, again, nothing completely out of craziness over here. Nothing that's mind-blowing or anything like that. But yeah, that's what I'm seeing right now. Ladies and gentlemen, don't forget November is one of Tesla's best months, and I definitely expect it to continue to be so. But I do think that we need a bit of a cool off after such a beautiful rally off these lows from the 190s roughly. But yeah, that's what I'm thinking, and that's what I'm seeing, and that's how I'm kind of moving forward as well. So if you enjoyed, don't forget to hit that like button. Thank you so much for watching, and I'll see you tomorrow. Peace.